Hello everyone and welcome to my channel. So today I will teach you how to identify weekly order flow and how to anticipate the daily bias. Okay, so everything that I'm explaining is from ICT core content mentorship and the 2022 ICT model. Okay, so for the weekly analysis, since today is Sunday, so I will be analyzing the chart for S&P 500 index, and I will be anticipating for a daily bias for Monday. Okay, so going into the weekly chart, as you can see, the order flow, we are making higher highs and higher lows, so the order flow is bullish. Now, what we have, some type of resistance. We have this order block right here. We have the mean threshold of the order block. We have the proportional block. We have the consequent encouragement of the wick, and we have the high. Okay, so we have a lot of resistance here, and I just marked the first type of resistance. Now we have here a fair value gap, a weekly fair value gap, and as you can see, price last week hit the target of the fair value gap and expanded to the upside. So I expect the next week to hit this area. Okay, so now going into the daily, you can see here that a swing low is formed, and we are pushing higher. So the daily bias for Monday will be bullish in my personal view. Okay, so you can do your own analysis, and this is just for educational purposes. And I have here a daily. Okay, so the daily is in red and the weekly is in blue. So here price last week opened, hit the fair value gap, weekly fair value gap, and expanded and took the high of the previous week. Okay, now I expect Monday to take this high, and as you know, we have other targets. Okay, so we have here the proportion block, and we take the mean threshold of this area, and we have the wick plus the consequent encouragement of the wick. So these all are type of resistance. Okay, so what does it mean, type of resistance? So when price hit the order block the next day, so let's go to the daily. Price hit the order block Tuesday, I do nothing. I anticipate Monday to be bullish. Tuesday, I cannot know if it will take the Monday's high or if it will form a swing high and retrace below 50% of the daily expansion, retrace below 50%. So price can do something like this, retrace for the 50% to a PD array, then keep going higher. Okay, so this is all on a weekly, so the retracement can be on the weekly. Okay, but the retracement expansion, it could not be in a week. Okay, so and price can keep going higher. So I know Monday, I anticipate Monday, I don't know for sure, I anticipate Monday to be bullish and to hit the first target here. Okay, and This target, I anticipate this target to be a type of resistance. So I anticipate for Tuesday to form the swing high on the Monday, and for Wednesday and Thursday and Friday to go for a below equilibrium PDRA. Okay, so swing highs and lows on the daily chart are very important, because it can give you the daily bias for the next day. So for example, let's take the previous week. Monday, I know that Monday will go and hit the weekly fair value gap, so I know Monday will be bearish. Tuesday, I did not take a trade because I don't know the daily bias on Tuesday. Since a swing low is formed here, okay, so we have a low higher on the left and a low higher on the right, so this is a swing low. I expect the price on Wednesday to be bullish and Tuesday highs to be taken, plus going into these highs and into the mean threshold of this order block. Since the weekly order flow is bullish, so I expect this high to be taken. Okay, so the retracement is below 50% or at 50% equilibrium, and the expansion is to get the highs and to go to a form of resistance on a weekly chart. So for the next week, I know that Monday will be bullish. I expect nothing from Tuesday. I see price what will do on Tuesday, and based on this I will anticipate for Wednesday and Thursday what to be. So I take 2 to 3 trades per week, and I think that it's more than enough. 1 to 2 trades per week is very good, with 1% risk management, with 1% risk and a very high probability trade, plus very high risk to reward ratio. It can make you around 4 to 5% per week. So it's very important to know the daily bias, take the trade with the daily bias, and I use the ICT 2022 model for entry for my trades, okay, and I take it on the 1 minute. I have other rules for my entry, but for this video I'm explaining how I analyze my weekly open and my price for the next week. So we hit this area, we have an order block here, weekly order block, so everything in blue is weekly and everything in red is daily. I expect Monday to be bullish, okay, and I expect nothing. If Monday hit this area, I expect nothing on Tuesday, so I don't take on trade on Tuesday. Okay, so today I explained how I see the weekly and daily analysis and how I do it, and what I focus on. I focus on swing highs and lows. I focus on the weekly order flow, is if we are bullish or bearish, and I know for a fact if these days are going lower and we didn't hit an area of resistance, I know for a fact that this is a form of retracement for a weekly PDRA. Then we are going to expand more to the upside, okay, and this is what happened on the last week. And for Monday, I anticipate price to hit this order block right here, this weekly order block, okay. And for Tuesday, I anticipate nothing. I just read the chart and see what price will give me evidence for bullishness or bearishness. So if you see this video and it's beneficial for you and it gave you some insight on the weekly and daily analysis, because I studied a lot and I focused a lot to become this good at weekly analysis. Please, if you like this video, don't forget to like and subscribe, and see you in the next one.